the real secret and the reason why the price of Bitcoin is dipping. Yes, we are getting new lows, which is panic in the market, but why? From a psychological mass herd psychology, human behavior that's inherent in all of us that are participating. That's what we're going to dive deeper into so you can have a deeper understanding of not only the crypto market and Bitcoin, but all markets. So you can be 2 steps ahead of the market as opposed to 2 steps behind. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. So I do high-level, Elliott wave, and Fibonacci. Fibonacci that reads the market psychology. And Ralph Nelson Elliott, phenomenal genius guy, figured out that the markets, all markets, move in sequences, patterns that are recognizable in advance and is not random. And he figured this out in the 1800s, 1900s, and it still applies today. So this is what drives the market, the secret that no one tells you because most people don't actually know. The direction of change of mass psychological mood is what determines and drives the market. Yes, the direction and change of mass psychological mood determines the movements of the markets. That's what he figured out. That's what we figured out. And most people don't realize this. So there's something inherent in mankind that makes them behave the same way over and over when they are part of a crowd whose members are betting on the movement of prices. In a particular market. So effectively, if people are speculating, most of the crypto markets, stock markets, bond markets, commodity markets, the forex markets, people are betting on the market. There's a huge degree of speculation. And when that herd psychology comes in, the direction of change of mass psychological mood determines the movement of the markets. That's what we're going to look at in more detail today. So this is a macro viewpoint of Bitcoin, macro viewpoint. And what I mean by macro is, let me just draw this out so it's really, really clear we're on the same page. This down here is 2017. This was the end of 2018. This was April 2021. And this is where we are today, right? So it's a macro picture. And there's a few very important things I want you to be aware of today. I'm going to cover them in a good amount of detail, So let's just look at this. Firstly, extreme bad news is at the reversal of a market. So what I want to look at, let me just make this even clearer before I dive in, because I did a lot of thinking around this, and I wanted to make it clear. Right, we're going to use this 5-wave sequence, this 1, 2, 3, 4, 5-wave sequence to talk about a reversal, the beginning of a wave 1. So we're going to use this as the beginning of this end of this massive 1-year correction, and then the beginning of this amazing move to the upside, right? That's what we're going to be talking about today. Why? Because we want to have a reference in comparison to where we are today. That's where we're going to end up with. What does that tell us of where we are today? And can we get some clues? Some very, 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 very big clues. Did I say enough varies? I think so. All right. So at the end of a correction, there's normally extreme bad news. So negative fundamental environment and arguments over survival. Will the market survive? Will it get past this phase? Will Bitcoin survive? And at the end of 2018, that was the narrative. That was the conversation. And this is true for all markets. So when this occurs, from this point is the wave 1 begins. And it's not random. The sequence that unfolds afterwards, the 5-wave sequence, is not random. It's a series of psychological stages. That's what Ralph Nelson Elliott figured out. So what we want to look at now is wave 1. What is a wave 1? Well, it's normally a rebound from the depressed bottom, right? The end of 2018 was the depressed bottom. So wave 1 is the rebound of this. It's the recognition by the market that it has survived. So it's recognition of survival by the market. We have survived. Before the rebound, it was, is it going to survive? And now it's like, okay, it looks like it's going to survive. We have survived and it's looking healthy. Realization that the worst has passed. But then wave 2, this is important. This is so important because it's relevant of today. We're going to talk about today, what's happening, but we can just track back just a little a year ago and what happened in the market. Normally, a wave two is a severe retest of what existed at the actual bottom, right? The 2018 actual bottom, the end of 2018, wave two actual bottom is a severe retest. In Fibonacci ratios, is between 50 and 78.6% price retracement. Very, very important to understand. And forms a base for the launch pad of wave three, right? What I mean by that. So let me just pull this up. This is so important. And I wanted to talk about this today because I'm listening to my private community, people that bought my course, they get an invite to my private Telegram community, how everyone's feeling. So this over here was severe bad news. This was COVID. The official announcement of COVID. And, severe for the entire market. You can't leave your house. Businesses have to close down. Just governments have to print money. Severe bad news. And it was a retest of the previous low. And often the wave two news on an intermediate and macro level is often worse than the severeness of the previous low. Right? That's important to know because we are experiencing something right now, which is very similar over here. Very, very similar. But this pattern recognition, when I'm talking about Elliott Wave Fibonacci, is very sophisticated psychology, sociology, how humans are interacting in a mass herd when they are betting on the movement of price. That's what we're looking at over here. And by the way, if you want to learn how to do this, I've got a free Elliott Wave and Fibonacci masterclass. I've got a full course on this. I worked incredibly hard to develop this, and it breaks everything down. We've got a 90% discount on the course. It's normally £97. Sorry, normally $997. Currently £97, 90% off. And again, I break everything down in step by step. And then the second part is Fibonacci ratios, how Fibonacci ratios apply to what we're talking about right now, literally. And if you buy my course, you get an invite to my private Telegram. We've got workshops, we've got other strategies, we've got hedges, we've got a lot of stuff happening in our community. We've just launched our Discord. So we've got some vibrant things happening, and we've got a brilliant community that are helping each other, especially during these challenging times with the market. So what I want to look at now is how, did you get, so what? What are you talking about? What's the score here? Why are you telling us this? Well, what we have now, right? Again, I'm just going to draw this out first. Let me draw this out. What we have now is, there's a particular movement with wave threes. We don't talk about that too much. And now we've got this big correction, what we're talking about, potential wave four, end of a wave four down here somewhere, right? That's what I'm looking at, right? So we've got this intermediate correction, right, which is referred to as a wave four. Well, what typically happens is what we spoke about, but it happens again on an intermediate wave count. And what do I mean by that is the following. Let's see if it pops up. There we go. Extreme bad news, right? So at the end of a correction, we're looking for the beginning of a new 5-wave sequence. So again, I'm going to pull this up. I'm looking for the initial move to the upside. I thought this might be it, but we've got a lower low being made, so it's not it. Right? So we need to take that into account. We said that in the last video, but we're looking for a movement to the upside of a new 5-wave sequence. But what we're also trying to do is peg the low, because when the market is in a depressed state, there's massive opportunity, but there's also massive fear and high risk. And we need to be aware of everything and make logical business objective decisions. So negative and fundamental environment. Arguments over survival. Now, in extreme lows, in extreme kind of corrections, we're not in an extreme run, an intermediate one. It tends to be of a lesser degree. But what is the negative fundamental environment right now? Well, there's talks of potential war, a limited war, and there's extreme bad news, and the market is coming down right now. So it's got the feel that was very similar to, and again, I'm going to draw it out here, to the end of 2018 and then COVID. Right? COVID was much more extreme as well. It was pretty extreme, different, but extreme. So what do we have now? Well, from this point, wave one normally begins and is not random and is a series of psychological stages. So what I'm anticipating, my thesis on the market, based on everything I'm seeing, is at some stage soon. Don't know when exactly. We don't know when. But like we didn't know this reversal was going to happen, and then this severe COVID correction, call it the COVID correction, led to just this amazing breakout, going from 5,000 on Bitcoin to like 64,000, like was that a 12x, 13x? Phenomenal. Are we going to see something similar? I think so, but it doesn't feel like it right now, right? It doesn't feel like it. It's like everyone's talking, the market's over. So this is what I wanted to really emphasize today. This is normal psychological behavior of mass herd psychology. So actually, I just want to finish on the first slide. Let's just go back to the first slide. So the direction and change of mass psychological mood determines the movement of the markets. So what is the psychological mass herd mood of the markets, where it's fear, it's pessimism, and then it's even more pessimism and more pessimism. And often the extreme pessimism is required for the end of a correction. It just is required, whether it's stocks, bonds, you'll see it. If we go back decades and decades and decades and look at charts from the early 1900s, 1926, there was different recessions and depressions and everything else. There was extreme news, extreme negative news, and even like the commodity markets and the futures markets, there was arguments over, is it going to survive? And then we had the movement to the upside, a retest as a wave 2, which kind of creates the base of a launch pad for a wave 3. And then there's something inherent in mankind that makes them behave the same way over and over and over and over again. When they are part of a crowd whose members are betting on the movement of prices in a particular market. And the particular market that we're talking about here is cryptocurrency, and in particular, Bitcoin. And Bitcoin tends to be the macro level indicator for the entire market. So there you have it. That was a high level sociology, psychology in terms of the movement of price action when we're looking at the markets. Because what Arthur C. Clarke said, he said, any advanced science is indistinguishable from magic. And these ratios of sociology and psychological ratios that play out tend to be like, when they hit, they really hit. So our wave 4 hasn't been invalidated. It does feel very fearful. I'm seeing it in the community. Even more sophisticated, more experienced guys are kind of getting tested right now. And hey, it looks like it's the bear market. I go, look, don't be overly surprised if we get more fear and there's more bad news, negative fundamental environment, and then we get that reversal and then a retest, which is wave 2. And that's what we're looking for. And when we get that confirmation, that forms the base of a wave 3. And I'm talking about a wave 3 of a wave 5, and then the market should really, really correct. So if you want to learn more about Elliott wave, Fibonacci, how to apply it from a technical standpoint, where you don't need to actually know what we just spoke about, because I don't often talk about the psychology of the waves. You just need to know the rules and the guidelines and how to look and find the waves. But sometimes it's important to see what's the method behind the madness. What did Ralph Nelson Elliott actually figure out? And so that actually is not random events. It's a psychological stages that tend to play out over and over again. And it's a 5-wave sequence and the 3. So if you like today's content, take my masterclass. Forget the like, forget the subscribe, just take the free masterclass, buy my course, get into my community, join my Telegram, and really upskill yourself, because this market is here to stay as a $1 trillion trend, and it's going to be revolutionizing the world that we live in today, which is blockchain and cryptocurrency, because it decreases the cost of trust by up to 10,000 times. So today we're going to finish on a quote. Normally I read a quote from my book, but I like to, because this is kind of like an emotional time. Like I'm feeling the vibe from people, the community, you. My private community, the questions that are coming up and how people are commenting, and the fear, uncertainty, and doubt is really now testing, because people's portfolios are down and they're really getting tested, especially with low caps. They get affected even more because there's a lot more fear. But again, it's the flick of a switch, and there's a lot of things that are pointing that we are going to get that reversal. But again, there's always probabilities, never certainties, and that's the game that we need to play. So what's the quote of the day today? Quote of the day today, Jigir. Let's have a think. Let's think. Well, I want to see if I can come up with one that I haven't used for a while. One that used to resonate with me a lot. I got a few flowing from my mind, but I'm kind of going, nope. Let's go. I want something a bit more profound. I got these ones in my head. Let's go. The one that's keep popping up is the one I think I quoted it a couple of days ago. It's, you and your world are composed of your thoughts. The wise person controls their thoughts. That's Buddha. That's a Buddha quote, right? So it's but it's very profound, because we're now talking about thought on a mass herd psychology level when we're looking at Elliott waves, and the world and the markets. Our world right now, let's just call it Bitcoin. The price of Bitcoin and our thoughts towards it is affecting the price, like in buying and selling behavior. So let's finish on this, right? So neuroscience shows that we as human beings, which really correlates to what we're talking about today, we operate 95% unconsciously, right? So there's an inherent behavior of mankind that tends to play out over and over again. Well, consciously, people think they're making conscious decisions all the time, but actually, what the neuroscience shows is that we're making unconscious decisions all the time. So there's fear and greed, there's optimism and pessimism that's influencing our nature of the way we're making decisions, the news, the negative fundamental environment that we're currently in, whether it's COVID, whether it's the potential war that's kind of happening out there, and there's all types of other things just in this particular market in itself. But we operate that way. So this is sociology and psychology on a high level. But what's the practical use case? Well, if we are in a wave four, there are severe things that are really undervalued right now. And if you believe this to be true, probabilities never certainties, there's a big opportunity to load up. But it also means high risk, because it doesn't mean just because these things that we're saying are highly probable, it won't go into a deeper correction. But again, the thesis still holds. We haven't traded into the wave one of 2017. So and the fear is real. Like you can feel it, And I go, okay, this has got the flavor of that wave two of the COVID wave two correction. Okay, then we should at some point see this wave one take off. And it's unusual because it's like the opposite. It's opposite feeling. And the market is normally two steps behind. And what we're aiming to do is use this information to be two steps ahead. So now we're looking at what's likely to happen in the next two steps as opposed to what just happened in history. And now we can take action based on that information. So if you like today's content, like, subscribe, hit the bell notification, take my free Elliott Wave for Fibonacci Masterclass, join my community, and I'll see you soon.